Today is Tuesday, September 3rd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Global Market Analyst. Starting with the financials this morning, Alan, what is the dominant fundamental influencing financial futures price moves today?
Okay, well, there is an increasing belief that the global economy may be weakening, possibly more than some analysts had anticipated. And this is also being reflected in this morning's economic reports, including the weaker than anticipated manufacturing PMI, the weak Institute for Supply Management Manufacturing Index, and the decline in construction spending. So all these reports came in weaker than anticipated. Also, the interest rate futures markets are sharply higher in response. In fact, the bonds are over a full point higher. Stock index futures and industrial commodities under quite a bit of pressure, especially copper and silver, for the same reason, possibility of economic weakness. Gold lower, being dragged down by other metals, but is holding up relatively well. That would not be surprised to see the gold market staging a recovery later today, and still looks like the main trend for gold is higher despite today's move.
Alan, how have today's economic reports affected prospects of the Federal Open Market Committee's likelihood to pivot to accommodation at its September 18th meeting?
Okay, so in a rather unusual move, in the overnight trade, we saw the probability of a 50 basis point cut at the September meeting. That was at 30%. That has jumped to 39% as of just a few minutes ago. So normally the expectations moves don't move that much. So there's a rather almost frightening global move to some type of worry about the economy that would vastly change the prospects of a rate cut by 9 points from 30 to 39. So it seems like the world is anticipating some slowness, and this is very much affecting financial futures markets, industrial markets as well. So there's a growing chance that the Fed could cut by 50 basis points at the September 18th meeting.
Well, soon to come, we'll see that. Turning toward the ag markets, Mark Soderberg, what caused the big drop in bean oil prices this morning?
Well, without a question, the biggest reason is because China has launched an anti-dumping investigation into canola imports from Canada. This was in response to Canada's announcement last week that they were imposing a 100% tariff on Chinese EV imports and a 25% tariff on steel and aluminum imports from China. Canada typically produces between 18 and 21 million metric tons of canola, also known as rapeseed. They produce that much per year, with about a third of that production is exported. And the vast majority of that, those exports, about 75%, goes to China. So the last time these two countries were involved in a trade dispute over canola was 5 years ago, which resulted in China importing more canola from Ukraine and Australia. This time around, China may have to opt for additional palm oil imports from neighboring countries like Indonesia and Malaysia. The secondary reason, I think, for the weakness in the bean oil is the sharp plunge in crude oil futures, now down over $3 a barrel to its lowest level in 7 months.
Short week this week, Mark. What other news or reports out this week will drive agricultural prices?
Well, we'll get crop conditions this afternoon. I look for just a slight drop, 1% in both corn and soybeans. This would take corn ratings to 64% good to excellent, soybeans up down to 66% good to excellent. We also get census soybean crush For the month of July, after the close today, we're looking for about 192, 193 million bushels. That would be up from 184 in June and 185 from July of last year. In all likelihood, we'll post a record high amount of beans crushed in the month of July. Oil stocks, they're expected to dip to below 2 billion pounds. It's down from 2.125 at the end of June, and also well below year-ago inventories. Recall last week on Friday, the monthly EIA report showed a big jump in biodiesel and renewable diesel production with more facilities coming online in the month of June. Bean oil usage in the month of June surged 18% from the previous month, and it was the second highest monthly usage ever. We'll also get a slew of production estimates out this week with the USDA report next Thursday. And of course, we'll be watching for additional export demand, as now we're starting to see a big jump in the amount of U.S. beans being shipped to China as they finally switched over away from Brazil and towards the U.S. supplies.
Thanks, Mark. Mark Bowman, we've been talking a little bit about cocoa market in these past few weeks. The ICCO released their latest quarterly statistics on Friday. What did they indicate for the cocoa market?
Well, the ICCO is the International Cocoa Organization. The report did show a slightly larger deficit for 23-24 than what they had in their second quarter update. Ending stocks also declined, but the stocks usage ratio increased slightly. The production deficit now they put at 462 million tons versus 439 million previously. Ending stocks or grindings ratio 27.9%, which is a little bit higher than the 27.4% last month, but it's still the largest in over 15 years. Next thing we're looking to is what's going to happen with the main crop. Harvest begins next month, and the weather has been pretty good this season. They've avoided any disasters in West Africa. It's not been too dry. It's not been too wet. Not perfect, though. There's some dryness recently. Will rain over the weekend, but our weather service is a little concerned that, World Weather Service anyway, that it could still stay dry, which would reduce the pretty strong expectations for the crop this year.
Speaking of weather, Mark, India has received ample rainfall this year. What does that portend for sugar and cotton?
Well, last year, India had a disappointing monsoon, and that led to lower domestic sugar production that ultimately led them to suspending the exports of sugar at one point during the season. This year, they've seen a very strong monsoon, which is key for group crops, including cotton and sugar. Now, in the U.S., we've had a recovery in U.S. production this year. We've got strong competition from Brazil that are pressuring prices this year. So any indication of strong production out of India would be pressure prices too. But the current weather outlook is changing slightly. Now they're worried that the monsoon could stick around too long, especially if La Nina develops as expected later this month or early next month. They're looking for above average rainfall in September. They had above average in August. The India Weather Department is forecasting rainfall at 109% of the 50-year average. The nation has received 6.9% more than average since the start of the monsoon on June 1st. So this will be bear watching to see if all of a sudden India's problems become too much rain rather than not.
We'll continue to watch the weather out in that part of the world. Thank you all. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.